Here's the closing bell at the New York Stock Exchange.
Gotta love that. TCU ringing the bell today with some chants there. Fired up despite the markets taking it on the chin. Hopefully that's not an indication of what's to come for TCU this weekend. The Dow falls 140 points and the NASDAQ has had a brutal week, as Inez just told us, down 5.4% for the week after dropping 0.9, nearly a percent today on a very tough Friday triggered by the FedEx news. For a closer look at the broader markets, let's bring in Bryce Doty, Fixed Income Senior Portfolio Manager and Senior VP, and JoAnne Feeney, Advisors Capital Management Partner and Portfolio Manager. Good to have you both. JoAnne, let's start with you, and the soup du jour is FedEx. Is their problem a FedEx problem, or is it a looming global recession problem?
You know, that does remain the question of the day, and I don't think we got any resolution to that. There are certainly some reasons to believe that there are macro problems. There's clearly a switch from consumers moving more towards engaging in services as opposed to buying all those goods they bought during the pandemic. There's no question about that. We definitely have a slowdown there in the macro environment. And China, with its zero COVID policy, clearly is causing problems for a lot of folks. But you know, my read through on the FedEx situation is there's also a lot of company-specific issues there. And so I think we should be a little bit careful about reading too much into that for the broader economy, which isn't to say that the broader economy doesn't have problems. There are clearly real shocks to the economy, COVID zero in China, the European situation with the Russia war, the labor shortage in the United States, rising interest rates, crimping some demand. So there are real problems out there. But I think the FedEx read is probably overblown relative to the underlying macro problems at this point.
And Bryce, to that point, earlier we spoke to Ann Berry, who said the markets are pricing in for what the Fed might do, but really not pricing in some of these other macroeconomic issues. Do you agree with that?
Well, there's a whole lot of Fed worries between FedEx and Federal Reserve. I think investors are waving the white flag. I think they're convinced that the Fed is going to succeed in destroying enough demand that we're headed for a hard landing. I think that explains a lot of the equity moves. It certainly explains the inverted yield curve and bonds. So I think that's something that investors are basically just building in as inevitable at this point. You know, they're looking at another 75 basis point rate increase by the Fed looming next Wednesday, and that could be the final nail in the coffin. I'm not sure.
JoAnne, we're coming off the Dow, NASDAQ, S&P all having their worst week that we've seen in 3 months. Bryce was just talking about the Fed meeting next week. If we do get a 75 basis point hike, how do you think the market's going to respond?
I think that that's exactly what the market is expecting. So we shouldn't expect much of a reaction. You know, let's put this decline this week in context, though. And that combined with the second half of August decline. Remember, we did have a pretty strong summer rally. And then there was this reset in the second half of August when Powell made it clear that, yes, indeed, the Fed was taking this very seriously. And in the light of some of the challenges the global economy is facing, it is going to be hard for the Fed to succeed quickly in reducing inflation, and it will take a long time. And even this last week's sell-off came after a very strong beginning of September. So, you know, the market is going to remain volatile. The new information that comes along is going to cause these kinds of big dislocations. And we do see this run to safety in a week like today when people think, you know what, maybe the chances of recession are higher than I thought a week ago. Let's reposition. But for a longer term investor, somebody with a horizon of 3, 5 or longer years, you know, these kinds of setbacks in stock prices give people an opportunity to build in potentially better quality companies into their portfolio or higher growth companies into their portfolio, knowing, of course, that the volatility is going to continue and that strategy may not pay off for a little while. But sometimes it's hard to know when you're getting the best price for a stock.
That's the word we need to hear today, JoAnne. Bryce, opportunity. Where is it with this macro environment?
Well, we love the short end of the bond market. I mean, you see T-bills at 4%. You can buy 2-year corporate bonds at almost 5%. We know that. We manage our own short duration ETF vault. And we're just getting incredible yields on that right now. And with a duration of, 1.5 years, you can get over 4% yield right now. That's a great ratio. At the beginning of the year, you couldn't get any yield and you had tons of interest rate risk. So we think there's a lot of opportunity there. One thing that we did love and now we don't as much anymore are TIPS. TIPS had a great run. The Treasury inflation protected securities were great, but we think that's kind of over now. And then I agree with the point that in the long term, stocks are going to be good, and there is going to be a good entry point somewhere in the next 3 months. I just don't think it's now. But whenever you think of a bottom, it's always when everything looks horrible. It's not when it's bright and sunny, right? Those are tops. And things look pretty bad right now. You just look at a mortgage rate on a median home price home right now. It's gone up $1,000 a month for a mortgage payment from just pre-pandemic levels. That's almost double. That's going to create such a huge headwind for homeowners and home prices because it's the incremental home buyer that sets the price for the market. And those kind of things are really just going to get worse as the Fed reduces their balance sheet. They're reducing their mortgages considerably. And so you have a much larger spread between the 10-year Treasury yield and mortgage rates. It always used to be 2%. It's now 2.5%. You have a 10-year less than 3.5% yield, and yet 30 mortgage rates are over 6%. And they've just begun to reduce the balance sheet. So there's still a lot of headwinds that are going to come to roost over the next couple of months. But in the long run, that's probably going to be where there's an entry point for stocks.
And JoAnne, those headwinds obviously part of the reason why for some companies they're not giving forward guidance. What are your expectations for earnings season coming up?
Yeah, this is probably one of the most uncertain earnings seasons we're likely to face. Because, on the one hand, we've already seen some of the expectations come down. On the other hand, when you look at the multiples in some of the stocks, it suggests that these earnings numbers are probably going to come down even more. So there's going to be a lot of information coming out of these earnings reports that start next month. We're going to have to, wait and see. But that's why I say the second half of the year is likely to continue to be volatile. And, the timing of when you get into more stocks or when you decide to continue to seek safety in the bond market is always a tricky one. And that's why I do think it comes down to time horizon. The point that was just raised about the housing market and mortgage rates being so high, interestingly, one of our stocks that we like, particularly right now, is Lennar, which is a home builder at the entry level and one step up housing, where there's still an awful lot of demand, particularly among millennials who are right now under owning houses as a proportion of that generation. And you see a stock like that move up on a day like today. And that suggests to you that investors might be out there ready to fish for these opportunities. You just never know when these things are going to turn. So look to the long term, find stocks at a good multiple that have solid business models, that have long-term growth prospects.
We'll be keeping an eye on those Lennar earnings that are coming out. A big thank you there to Bryce Doty and JoAnne Feeney for joining us this afternoon. Thank you both.